Hi, this is Mark from Right Lane Trading. This is our evening newsletter. Starting with this disclaimer that all signals and trading opportunities that we provide are for demonstration and educational purposes only. Everyone should understand that participating in the markets involves substantial risk and that a person can lose a substantial amount of money. Always carefully consider your financial position prior to trading. Never risk more than you can afford to lose, and do your own due diligence and consult a financial advisor prior to making any trade. Now, at this point in the market cycle, it's looking pretty bearish overall. Geopolitical events being as they may, we're facing really an inflationary crisis, and a lot of problems up ahead. And what I'm looking for is to try to pick up something on the cheap. Now, I really did a review of about 150 stocks. I'm looking for just a couple that I thought maybe reaching a bottom and beginning to base. And the one that I thought looked most opportune was that of Spotify. Now, last quarter, Spotify did disappoint. Its subscriber base growth had slowed, and they projected that it would slow for a quarter or two. They're coming under a lot of pressure from Apple with their playlist, and now from Sirius, because they're vying for Sirius XM Radio, because they're vying for podcasts, and Spotify has an enormous number of them, and Sirius XM is really working them hard. So, but you can see that Spotify had a higher 387. Now it's forming a base right around 200. Now, we want to see the stock. The stock right now is at 227. I'd like to see it come down to right around 200, 205, form a base, make a move up, come back down to retest, and then head right back up. Now, we could hope that what we would see would be the classical bull flag pattern, where Spotify would make a move up, consolidate, make a move up, consolidate, and hopefully, optimally, we're going to see it go all the way back up to its high here of 387. Now, it may take some time. Bull flag and bear flag patterns take sometimes a significant period of time to evolve. But in stocks that have subscriber bases and they're very loyal, those are the kind of stocks that you really look to hang on to. Once you build a watch list, or a song list on Spotify, you're going to stick with it, and you're not going to get shaken out so easy. Now, a lot of the weak hands have already been shaken out. We saw it come down to test the 200 to 205 level twice, and maybe a little bit optimistic here, but what we're really looking for is the move really down to around 200, a bounce from there, then a retest and a bounce. I like Spotify a lot. Moving forward, it's a very, very aggressive company. It's got a fabulous product and a loyal subscriber base. Everyone have a wonderful evening, and I look forward to talking with you tomorrow. And by the way, I have a terrific stock I found that I will discuss with you tomorrow in the newsletter. Good night, everybody.